Well, good afternoon, everyone. It's about 20 to 4 here in London on the 31st of May, another month gone. And as you can see, nothing much new to report on the overall US market. The S&P is down 36 points on the day. And all of the measures of the trend on VectorVest are down. As you can see, short-term trend is down, the underlying trend is down, and the longest-term measure of the trend on VectorVest has been down since February. Okay, but clearly there have been stocks rising, and yesterday afternoon at our VectorVest UK Q&A, I was asked by a VectorVest customer, is it too late to buy into those wonderful tech stocks that have been soaring up the page over the last week or two? I didn't have a great answer. I'm going to try and expand on that this afternoon. Nobody knows what's going to happen next, folks. Anybody that does tell you categorically that they know what's going to happen next is, at best naive and at worst a complete and utter bullshitter. So nobody has a clue what's going to happen next on a trade by trade basis. The market can be forecast exceptionally well over a batch of 30 trades, but over one trade, I am afraid that the market can't be predicted. If you believe that you know what's going to happen next on a trade by trade basis, then unfortunately your beliefs are completely out of sync with the market reality. I did a 1-hour lecture on that at the Johannesburg Stock Exchange some years ago, which is online. Anybody who wants to listen to it, it's been well reviewed. Let's have a look at the US market, if I can find the darn thing. There we are. And as you can see, we've been in this ghastly range. We're right at the lower edge of this range. The broader market much weaker than the S&P, and the S&P, of course, much weaker than the tech indices, the QQQ. As you can see, the number of shares on a buy divided by the number of shares on a sell at a miserable 0.29, and that's been the case pretty much since March this year. I put on the longest term measure of the trend, and you can see that that long term measure of the trend, the confirmed down, has done an outstanding job. It's kept us out of all of that banking angst. It's kept us out of all of the debt crisis angst. The debt crisis seems to be going reasonably well. The Republican fellow and the Democratic fellow are saying the right things. It's going to the House, although I don't quite understand the American political system. It's going to the House tonight, and then it's got to go to the Congress later in the week. Everybody expects it to go through. However, ladies and gentlemen, the Treasury, the US Treasury, is essentially broke because it's been paying a lot of bills over the last 3 or 4 months. And that means that the Treasury will have to be, in fact, financed again over the next quarter to 6 months. Now, last week I presented to the VectorVest UK people that my back of a cigarette packet calculation showed that it was going to take 600 billion US dollars to do that. I see this morning Goldman Sachs have come out and said it's going to take a trillion US dollars to do that. But what's 400 million between friends? It's going to take an awful lot of money. Their point and my point is that money's got to come from somewhere, and that money will be sucked out of the stock market and will cause a drying up of liquidity. And that's a major headwind for markets over the next 3 or 4 months. Okay, so let's see how that goes out. On both sides of the Atlantic, the American side and the British side, bond markets have reworked their calculations, and it looks as if interest rates need to go up again. That's especially true here in the UK, where we could see 2 quarter points before the end of the year. That's going to cause a great deal of angst here in terms of people paying off mortgages. But that's another story for another day. So this is flat, folks. So and got a considerable headwind ahead of it. I wouldn't be at all surprised to see a nice move up when the debt ceiling thing is finally cleared. The deadlines are the 5th of June, I believe, something like that. But I think everything will be signed off before then. And then the real work will start. But we could quite easily see a nice move up along the way. All right, so let's look at what the S&P has been doing. I think I've got it here somewhere. Yeah, there's the S&P, folks. It's off a little bit today. And as I'm recording this, the video takes an awful lot of bandwidth or something or other, which causes the feed to go back and forward. But as you can see, we're off a little bit today. I wouldn't be at all surprised to see a bounce from here, but there's no sign of that as yet. I haven't taken a trade, although I probably should have been short below that low. So still stuck in this little range. So let's look at some tech stocks. And where my own money is, folks, is on the QQQs. And there's no doubt that I could have, in fact, done much better in Nvidia and whatever. But nevertheless, this bull flag, as I've explained to you so many times now, really attracted my attention, and I went long from here, and then I added to the position just here at this textbook Wyckoff Spring, and we've now, from that Wyckoff Spring, we've now traded 5 waves up: 1, 2, 3, 4, and 5. Now, yesterday when I was asked by one of our subscribers, Ted, in fact, what should he buy into stocks at this level? And my answer to him was, well, if you do, your stop loss needs to be one hell of a long way away to give yourself a chance. And I drew in this line, which I think is quite important, folks. From that low, 2 touches, didn't quite get back to it here. But I think that this, if you buy into this position now, your stop loss needs to be under this level to give yourself a fighting chance. And if we put on the VectorVest stop, we can see the VectorVest stop is significantly lower than that. So by all means, buy into tech stocks if you wish, but your stop loss needs to be placed a long way away. If you stick to the VectorVest recommendation of a 1% bet size, then it means that you're not going to have much of a position there, which is great. As long as you've got your toe in the water, isn't it great? Now, what's a little bit more worrying about the QQQs is that if I, in fact, go back, I've now got a weekly chart. I'm going to take the stop loss off. And I'm going to go from, this is from November 21, when this downwind started from that high, right down to the low of last September, October. And I can see that we were toying with a 62% retracement. In fact, Friday's high was the 62% retracement. It's actually opened up and closed off a little bit. I'm still holding my position here, but I'm tempted to bank this this afternoon, and because I think that it needs to pull back quite soon. So my answer, my honest answer to Ted on Monday afternoon, or Tuesday afternoon, in fact, we had a holiday on Monday, was that I couldn't chase the price. It's not in my game plan to chase the price. You've got to stay cool and let that price come to you. And I think that the microsecond after I would buy it up there, the damn thing would come right back to support. So let's look at another stock, which is the top VST stock. I isolated this stock, folks, way back at the Tampa 2-day event. I like the look of this pullback. The scaling does strange things to charts. This was in January, just here at the Tampa 2-day event, and my old eyes that like to look at bull flags, I know I'm like a broken record, but the bull flag has made me a lot of money over the last 40 years. And those of you at the Tampa 2-day seminar, I talked about this stock way back in January. And over the last 6 months now, as you can see, it pulled back and it ran the lows here. They love to do that before they go back. It's a liquidity drive. All the stops are underneath that low, and the market went back. That set off a whole football stadium full of stop losses, and that gave the liquidity for the big fellas to get in. And then all of a sudden it gapped. That's probably on earnings, and a gap through an obvious trend line. That's what I refer to as the rocket launcher. Now, they all don't work as well as this one, but nevertheless, this thing has really moved up incredibly. It was moving up at 5%, 7% clips. But, ladies and gentlemen, I've drawn a similar line on here. And I think that if you were to buy into this thing now, your stop loss needs to be down around that line. And the VectorVest stop loss is at 155 here. So I think that you would need to have a stop loss well out of the way to give yourself a chance on that. From an emotional point of view, I think that the pullback from 222 right down to whatever that line is at, 160 odd, that would be difficult to handle. And you could, in fact, find yourself chickening out at exactly where you should be buying in. So my advice to Ted yesterday was to wait and let the thing pull back onto a better level. I don't think that the next big thing has gone away, and AI is going to be with us for a very long time. But nevertheless, I think this has run far enough, and the risk to reward to me doesn't look favorable for a trade at these levels. I hope that helped, and wish you all good trading. Thank you. Bye-bye.